Good morning. Welcome to this update for the 14th of April for global stocks and commodities. An awful lot has happened in the last week and a half. It's become very much driven in the short term by geopolitical events, both in Syria and, of course, more seriously with North Korea. These sort of events don't change trends, but they do interrupt the sentiment and they interrupt the price action in the short term. The market in the US has really been struggling a bit for some time to gain any real traction. It's just been going sideways. And whilst that hasn't changed, we now may be going to test a slightly lower level than what we looked at last week. So I've been saying now for several weeks that that April was shaping up as being a choppy, sort of volatile month. We're finally seeing the VIX index start to break out, and so April is pretty much playing out as you would expect. So a bit of a shorter video this week. I'm not going to go into all the details about the geopolitical events because I'm sure you're reading plenty about that. So I'll just focus on the price action. The S&P ended up lower by 26 points on the week, and that most of that, of course, occurred in the last two sessions. I'm now targeting 2317 as one support level, which is just a little bit lower than where the market finished last night, or perhaps just a little bit below 2300. There's two support levels there, one at 2297, one at 2280. It's hard to see the market going much below that unless it's a short-term spike. If Korea does go ahead and do something nasty or Trump responds in some sort of way, then yes, of course, the market could spike sharply, but it's unlikely to be for very long. Now, the bright lights certainly for the week were precious metals, but biotechs also had a pretty solid night and were one of the main gainers on the session. There is a bit of mild profit taking in technology, but that's just to be expected under these conditions. The technology sector has had an enormous run, and we'll take a look at the chart of that sector ETF in just a minute. So after such a huge run, it's normal when things are a bit shaky like this to get a bit of profit taking. Of course, the other event that happened is Donald Trump was back on his tweeting machine again and trying to talk the US dollar down. So the currency movements, they did bounce around a fair bit, but look, they're really just kind of manufactured, and what Trump tweets can have an effect on the market in the very short term, but of course, as I said earlier, they don't change trends. So let's take a look at the US market. And we'll start with the S&P. So you can see this little green rectangle here was where I thought the action may be centered in the short term. And that was a consolidation in the absence of anything else, a consolidation above the 38.2% retracement. That's of the shorter time period, which is basically the low from the 30th of December. There's also a bigger period retracement, which goes back to the lows that we saw in November. And you can see now that on this shorter time frame, we've broken through the 38.2, so 2317 comes into play, possibly 2297. And if we get a slightly retracement of a slightly bigger time frame, then of course we come down to 2280. So I'm just going to move this this little box down, and I think that is probably now our target area, which is a bit below the 50-day moving average, but still well above the 200. So this is just a mildish correction and would only be a little over 100 points off the highs, which is only about 4%. And it's really hard, particularly as US earnings season has just started. It's and should be reasonably solid. It's hard to see the market going much below that, unless, of course, we get something sudden occurs around the Korean Peninsula, and of course that could cause a bit of panic. But again, I would see that as a buying opportunity. So that is the S&P. let's just look at the VIX index, because this is interesting, because the first time now since early November, the VIX index has popped up above. This is the VXO, but if we actually look at the VIX index, it's up around 16. So this is covering the Nasdaq 100. So that that's to be expected. And of course, we've had a bit of a flight to safe havens as well. Money's flowed into the Japanese yen. Money's flowed into precious metals, and also some money's come back into the bond market as well. And the VIX has spiked up. But look, these little spikes happen quite frequently, as you can see. They're happening all the time, every few months. And the fact that we hadn't had one for four or 5 months was probably notable. So where it gets to, whether it gets up towards 20 or a little bit more, will of course depend very, very heavily on geopolitical events. I don't really see earnings season as contributing to that. Now just checking the Nasdaq and the Russell 2000. This is the Nasdaq. Came off a little bit, but look, it's not much, and you can see the daily ranges are still quite small. If we look at the Russell 2000, this is in fact, let's look at the Russell 2000 itself rather than the ETF. We're in a range. We're now back to the bottom of that range. That range has been in place now since the end of November, but really nothing terribly untoward there. Now I'll just show you the technology index, and I'll amplify it a little bit by going with a leveraged ETF. So this is a 3 times leverage ETF of the technology index, and you can see it's had a fabulous run. Back in February of last year, it was trading at 26. Now it's trading at 64. So it's been an enormous run. Now that is a triple leverage, but the reason that I select that is that even with a triple leverage ETF, you can see there's no real panic selling there. Yes, we're off the highs. The highs were at 68. We're now back at 64. But the daily ranges are pretty small. You can see there's plenty of long tails on these candles, which is indicating indecision. So there's no real impetus behind the selling. And I could go through lots and lots of other charts that I look at that give me an indication of just what level of selling is likely to be behind this. And I'm just not seeing anything that is likely to lead to a more substantial decline. And quite frankly, given what's happening around the world, I'm surprised that the markets aren't weaker. Normally they would be. And I think this might be a reflection of the fact that the market is looking forward, and as I covered last week, there's an awful lot to like about the Trump tax reforms, and it's really hard to see the Republican Party, who is trying to block Trump, or the Democrats voting against most of his tax reform, because it just makes so much sense for America. To me, it's an absolute no-brainer, and I'm staggered they didn't do it 10 years ago. So I think the market is really looking at this and thinking, gee, there's a lot of awfully good news is coming along, and it might be 6 or 12 months or even 18 months before it starts to have an impact, but markets do look ahead. Okay, Aussie stocks, the Aussie dollar was higher, 75.5. That was really responding to Trump trying to talk the US dollar down, so the Australian dollar went up. We also had I think a very spurious looking jobs number in Australia that I think may well get reversed next month, but nevertheless that added another 0.5 cent to the Australian dollar. The index was higher by 28 points, but that was all erased in the futures market. The US will trade Monday night, so there will be another US session prior to the Australian market opening. So it's quite possible that traders ran for cover ahead of a 3-day weekend in America, and that we could see more positive trading in America in the absence of anything nasty happening in Korea. The technical target for Australia still remains 6,000 points, but I really think we're going to be in this range, 5,800 to 6,000 for a little bit of time. So let's just take a look at the ASX 200. Okay, so we had a range between 5,600 and 5,800, and now it looks like we're going to get a range between 58 and 6,000 points. But there's plenty of headwinds coming for our banks, so particularly having to raise more capital. So I wouldn't be surprised to see our index return to the 5,600 level. Anyway, we'll see how that plays out. Again, most stocks still not trending, but look, you can gain some traction by buying high quality stocks when they're oversold, and we've seen some really nice bounces in stocks like CSL, Ramsay Healthcare, in the healthcare space, and in quite a few of the technology online services stocks. So I think if you have a stable of really high quality stocks, which of course members understand what they are, and you pick off the dips in those, then I found that's been pretty productive over the last month or so. It's taken a while. We've had to wait for those dips to occur, but there's been some quite nice rebounds. And if you want to have a look at what I mean, specifically, probably one of the better examples is Ramsay Healthcare, and you can see that we had a sharpish dip, drop from 70 down to 62, and got quite oversold. Really nice reversal, and then it's followed through quite nicely back up to be above 70. So they're the kind of opportunities that make sense in the Australian market at the moment. But to get a hold of those, you've got to have a pretty decent stable of high quality stocks, and you've got to know in advance what they are. Precious metals, gold of course was up $32 to $12.87, so it's broken important resistance. The situations in Syria and North Korea provided the fuel, and then Donald Trump talking down the dollar really completed the picture. But I did note that the US dollar did rebound a bit last night, but precious metals held their ground. We've also seen more money continuing to flow into GLD, so another 6 or 7 tons flowed into GLD. And silver is still outperforming gold, which is pretty interesting. There is a strange inconsistency last night between silver stocks, and quite a lot of silver stocks actually went up quite robustly, and I'm talking 4 or 5%. Yet GDXJ, which is a pretty good reflection of certainly junior gold and silver stocks, and in particular silver stocks, actually went down by 3%. And that just seems to be completely out of kilter with what the stocks did. So I'm not quite sure what's going on there, but I'll be interested to watch how that unfolds over the next few sessions. So let's just have a quick look at gold and silver. So we'll start with silver first of all. And you can see we're just edging to new short-term highs. I'm not sure whether that's meaningful or not, but certainly it's got a strong upward trajectory since the middle of March. And if let's look at gold first of all on a daily. So gold has done quite well and has actually caught up to silver on that side of things. But if we look at the weekly chart, it's you can see we really do need to get back above this 1380 to 1400 level. But look, at least we're now back on the right side of the 200-day moving average, which for technicians is important. And the MACD has turned up, so there's certainly some promising momentum there. Let's just look quickly at GDX. Gold stocks haven't really reflected the gains in gold, and as you know, gold stocks do tend to lead in both directions. So I'm not getting overly excited about precious metals just yet. We might continue to see some choppy action for a little while in gold stocks. Other commodities, copper was down a bit to 257. Crude oil spiked a little bit further to just under 53. But oil stocks looking pretty weak at the moment, so I wouldn't be buying yet. I've been talking about this for months, so I'm not convinced that the sector's ready to rock and roll just yet. So focus on buying a reasonably deep dip in energy stocks. There's spot copper, not a lot of change. So to wrap it up, geopolitics never change major trends, so you don't need to worry about that, but they can cause significant volatility in the short term. But I would see that volatility as a good buying opportunity. You need patience to wait for the opportunity, let the market come to you, and the process is focus firstly on the right sectors, the sectors that have got the almost certain drivers for the next 2, 3, 5, 10 years. Clearly technology is at the forefront of that. So once you've identified the sectors, then just focus on those sectors. Don't try and trade or invest in the whole market. Just get very targeted and selective. And then once you've got the right sectors, pick the best stocks in those sectors. And if you buy dips, then I think you're going to do reasonably well. Earnings season is what prices stocks. That's what stocks are priced off longer term. And so far, it's only very early days, but we had several of the banks reporting overnight, and they pretty much reported where you would expect them to. So far, so good. And it's hard to see earnings season being a negative, given the way that things have gone in America. So that wraps it up for this week. There's my contact details for any non-members that wish to get in touch with me. And we've got a full week in America, a shortened week in Australia, and look, I'm sure there's going to be an awful lot happening. When you've got someone in North Korea who's completely deranged and unhinged, and you've got someone in America who is probably the biggest narcissist we've ever seen, and goodness knows what he's likely to do next. So I'm sure it's going to be a fascinating week. That's it. Have a great Easter. Cheers.